high credit risk. According to the South African Savings Institute, the youth are the biggest culprits. That's because they don't have any money management skills whatsoever, and the way they view life is totally different. And when you talk about planning for retirement, that doesn't ring a bell for them at all. And meanwhile, the high debt culture in South Africa is very rife. In particular, that most South Africans want to save, but they don't believe they have the money to do so. So why is it difficult for South Africans to save? And do they know about the investment tools that are available? Have you ever heard of exchange-traded funds, or as they popularly known, ETFs? Well, to tell us more is Solms, who is director of iTransact. Thank you very much for joining us.
Thank you. Thanks for having me.
Yeah. Why are South Africans finding it difficult to save?
I think lack of education and lack of knowledge about what to use when you save, because there are so many investment instruments out there, ETFs being one of them.
Is it the problem that the money is there, but they don't know how to divide it? Because the lamentation has been that they lack money management skills.
100% correct. When most people think of saving, they think of bank accounts or they think of unit trusts. But there are many other alternate investments like ETFs that sit in between that can be more than beneficial to investors.
Yeah, then what are ETFs? Because many people have said that when you talk about ETFs, it's like you're talking about something at the JSE, something that can be done with by a financial expert only.
No, not at all. ETFs are meant for guys like you and I. They're very simple to operate. When you buy an ETF, you're effectively buying one share that represents the performance of many shares. So, for example, if you buy a top 40 on the Johannesburg Stock Exchange, by owning one share, you own the performance of the top 40 most powerful companies in South Africa. And that's quite compelling for any investor. And it's very simple.
But then there's a difference between saving and investment. How much do I need to save and how much do I need to have so that I can invest?
Very little in actual fact. You can invest a lump sum of as little as R1,000 in an ETF or right down to 200 Rand per month.
Do I need a financial advisor or do I just go it alone?
Certainly not. There are many places you can buy directly. Satrix is one of them, for example, that you as an investor can go straight onto their website and buy it directly from the Johannesburg Stock Exchange. You don't need a financial advisor. In some cases, depending on your financial situation, you may. But for the youngsters who need to save, they definitely don't need a financial advisor at all. They can invest very easily by just going straight onto one of the websites.
Mm-hmm. Now, according to research, many South Africans want to save, but in their hearts, but practically they don't do it. And they always promise themselves that they're going to save one day. And the major attributes are that they're still highly indebted. They're still on the credit bureau. And they want to get out so that they can start saving. Now, with the money management skills they don't have and the financial illiteracy that they are going through, how do they go about to start doing it?
Well, I think most of the websites, if you Google ETF, most of the websites have got very good educational partitions on their website where investors can find out more about it and how to operate these kind of accounts.
Mm-hmm. Now, tell us about how would a financial advisor, or let me say I come to you and I say I'd like to know more about ETFs and how can they improve my financial well-being?
Well, first of all, ETFs are low cost. They are far lower cost than your traditional unit trust in South Africa. So just by being exposed to an ETF, you're going to reduce your cost to investment. And the natural benefit of that, low cost equals better performance.
Okay, who determines the cost of investing? Why should it be expensive for me to invest either through a broker or an institution, whereas I lack the financial literacy and the technical know-how of investing my money, especially when the markets are very volatile? I do not have express knowledge of identifying a stock which is having risk on the upside or on the downside.
Well, ETFs solve that problem. You don't have to know which stocks are going up and which stocks are going down, purely because when you buy an ETF, you're exposed to all the stocks in that index. So it's almost like you buying the haystack instead of trying to find the needle.
Mm-hmm. But then say I'm about to go on retirement and I've got my retirement payout, say the third of my retirement money, and I need to invest it properly. Do you think that if I go to a broker and ask him, can you please preserve my fund so that it doesn't lose value? Or can you grow my wealth? Can I trust the performance of the market and the skills of that investor on my behalf? Because, I've been working all of my life. I don't have time to look at the markets and observe the high frequency data.
Well, absolutely. I think at that point in one's life, one definitely needs financial advice. There you would employ a financial advisor to guide you through all the options when you're preparing for retirement and going into retirement. As opposed to somebody starting out in their working career and trying to accumulate wealth, you don't necessarily need a financial advisor. ETFs can help you build up that wealth to the point where you have got the wealth, and then you take advice on how to deploy that wealth into retirement.
So going forward, what would you advise anybody who would like to start investing with a strategy and the objective of living a comfortable retirement life? Because it's so sad that when you are no longer working and you are an old man or an old woman, you cannot have income anymore. Your pension is all what you have, but it doesn't match the salary that you have been earning all along. You have now reached a cul-de-sac in life. What can you advise these people who are still working now so that they don't have that retirement depression when they retire?
There's a common denominator out there, and that is take 10% of what you earn and invest it. Doesn't matter what you invested in, but save it. 10% every month for the rest of your life, and that should tide you by. The longer you wait, the less opportunities that you do get. If you take a person's working life of 20 years, they've probably got 240 paychecks. That's all you get. You've got 240 chances to save. So I would advise people to start saving as early as possible with their first job.
Okay, just very quickly before you go, internet trading. Some people would like to buy and sell shares on the stock market online, at home, just on their laptop. How risky is that? What are the benefits as well?
Well, I think to do that, you need to have a lot of knowledge yourself. I think you have to be highly qualified to make the decisions on buying single stocks. I think for the ordinary investor like myself, for example, I would rather buy an ETF because those decisions are made for me already. I can buy with one share, I can access the top 40 companies without doing the research, being comfortable and confident that the supplier of the ETF has done that work for me already at low cost.
But people who sell those computer programs or computer software are saying that you are the boss. That's your money. You have to make the decisions. But then how sure are you that the investment decision that you are making is a prudent one and you will not be broke after that?
Well, you can never be sure of that. If you're buying a single stock as opposed to many stocks, your risk just goes up through the roof. If that one stock goes down and you've put all your assets in that single stock, it's very, very risky.
Well, it's very, very risky. Let's leave it at that. So if you don't know, just ask. If you don't have financial literacy or you don't know much about the stocks, I think that the best way is to ask before you put all your money in there. Well, that's Solms, who is director of iTransact. And if you want to start investing, good luck, and I hope that you will reap the benefits.